Testing 1, 2, 3. All right, I think I'm stabilized. Hang on. I'll start in 30 seconds. And boo-hoo, Microsoft, boo-hoo. All right. G'day, mate. How are ya? Let me turn the rickety racket off. I gotta find it. It's over here. Yeah. All right. Good morning. Welcome to FX Street. Trade Non-Farm Payrolls Live. This is a new webinar. We are only on our 223rd month in a row of this brand new live stream. Very cool, huh? 223 months. Yeah, that's 18 and a half years. So thank you, FX Street, for being wonderful partners. I enjoy working with you. Let's see. It doesn't think I'm subscribed. Oh, I see. I'm logged in the wrong YouTube account. I only have 10 of them. Let me do that so I can participate in the chitty chat. Oh, and then what did it do? It logged me out. There we go. I changed profiles and it logged me out. Nice process. So anyways, cool. Very good to be here. I'm very excited about this upcoming week. So we have non-farm payrolls, right? And then ISM manufacturing is at 10. Next week on Tuesday, there's an election. On Thursday, there's the Fed interest rate decision. You know what I'm talking about? And on Thursday, I am doing a presentation at the Fed. So I will be teaching university professors how to teach economics. So thank you to the Federal Reserve Bank of St. Louis for the invitation to speak. So very, very crazy, busy week. Next 7 days are critical. So, all right. So let's get on with it. So what I propose is that we go through some fundamentals. We can look at some technicals. We get the headline numbers, and we can check out the vol. And then we can see if there's any trade plans that can go along with that, and we can see how the headline number kind of confirms or denies market participation going into the election. I can answer questions, do some Q&A and all that. So we could use the full 3 hours. But really, I think the election might drain our markets of volume and volatility. So if it's quiet, we could even start the weekend a little early if you want. I mean, it really depends on what you do. So I am a servant, and you are the boss. Very cool. So my organization is traders.com. It provides you a way to get a fundamental and technical strategy put together. We also have many hours every day of performance coaching. And then the next step is you're going to need execution. And I recommend you get yourself an ECN. Okay, an ECN uses a model called straight-through processing. Yeah, it's faster and it's affordable and all that kind of stuff, but it's the most honest business model in the Forex brokerage industry, where they earn an income by providing you a service. You click a button, they execute the trade into a pool of liquidity partners. We call that the interbanking system. But most brokers use some other thing where you just get thrown into a dark pool, and the brokers laugh at you because they make money when you lose, and they want all their clients to lose money. You're like, really? It's really a strange thing. And they never actually execute your trades into the interbanking system because they figure eventually every single one of their clients will lose money, so they just keep it. Oh, I noticed something over here. I need to make a change over here. Man, there's lots of little changes. Hang on. This will be more like what we want. There we are. It's not quite right. Man, so that Microsoft update was weird. Yeah, weird. Nothing's right. I'm torn. Even our ticker tape now doesn't work. That is really strange. So at the bottom, we typically have a ticker tape with FXStreet News. And it doesn't work at all. Strange. What did Microsoft do? Anyways. So, yeah. So that's what you want. You need strategy and tactics, and then you need execution. Let's go into the fundamentals. I'm probably in the wrong browser, aren't I? Wrong browser. Man, what a day. Don't let it get away. Let me see. I'm in the wrong browser. Like I said, I was scrambling after this Microsoft update. and nothing seemed to work. Even the machine behind me took 20 minutes to boot. All right. Oh, there's no sound here? No, there's sound here. Oh my God. And total collapse over here. Oh my God. Is this all related to Microsoft? Or is this everything is glitched out? Oh my God. That's crazy. I haven't seen this before. So I can't start my server behind me. And by the way, my camera's off a little bit, right? My server behind me wouldn't start. It took 20 or something minutes. It took another 20 something minutes to get this machine up. And, but this is not sitting on my machines, but my God. Interesting how, so other machines, so my other servers are, wow. Well, this wouldn't be browser related. This is the Google Cloud. And well, I suppose the data itself is coming from data partners. The processing part is on the servers, but I can tell right away, like on the fundamental side, nothing's going to work. And that is extremely rare. Like some, it's like now the server that this is sitting on has received a Microsoft update, and like I've never seen this error before. The data set has been, wow, yeah, interesting. We're gonna have an interesting day. Oh my goodness! Now this data sits on a different server. Okay, so anyways, I guess we'll just start with technicals. Holy smokes! What a day! Yep. No, it wouldn't be that. It wouldn't be, see, not the web server, right? The data server. So, dude, there's running traders.com, there's a lot of servers. Let's just put it that way. So anyways, interesting. But these things do happen. Just realize it's not like us. It's not like my service is down or something. No. That's something else. So I imagine that'll be up later. All right. So let's then start with technical analysis. And traders is, our tagline is radars for traders, right? So we have fundamental radars and we have technical radars. And so what we're going to focus on today then, since fundamentals seem to be down, on the Google Cloud seems to be down, then we'll move over here. We can go over pattern recognition for Forex pairs, cryptos, stocks, commodities, and stock indices. What do you guys want to focus on today? Now, I got an email 20 minutes ago from traders.com, and it shows, okay, this is nice because it gives you a little heads up. Shows you NFP is coming up. Apple is down. Amazon looks like it wants to come down too. Tesla looks like it wants to come down. Meta looks like it wants to come down. NVIDIA, not NVIDIA, say it right. NVIDIA. Cool. Down, okay. All right, now let's see. Aussie dollar, descending triangle, so that's definitely leading to US dollar strength. Kiwi dollar, channel down, definitely, you can see from the A line down, take that distance and project it down to 58.83. So that looks like US dollar strength as well. big move on USD kitty cat. Once again, USD strength. USD Swiss franc up just to the next level of resistance, but once again, US dollar strength. USD yen up. Okay, well, once again, some US dollar strength up to resistance. And Bitcoin down. Ethereum down. This is all very much focused this morning on US dollar strength and the stock market coming down. That's a nice little email, huh? Yeah, it's 80 cents a day to get this email. Don't let it get away. Yeah, 80 cents. You want to play, you got to, right? You got to play it. If you want to play like the big dogs, you got to pay like the big dogs. Yeah. So we can do all that. Nobody answered the question, though. What do you guys want to trade? What do you guys want to, like, I'm assuming Forex, because, you know, we're Forex traders and we're at FXstreet. But besides Forex, what's your next one? How about that? Let's focus on that. Besides Forex, what's your next big focus? Gold, indices, besides Forex? Besides Forex? Yeah. Indices? Besides Forex? Yeah, Denise, yeah. Yeah, and that's probably been that way for like a week, right? Yeah. Some gold. I'm gonna see if I can get the chat in the recording, just so it's a little bit better. Let me see if I can do this. So I'll be happy to do that. There we go. So weird that even after this Microsoft update, even the, I mean, why would the ticker tape not work anymore? So strange. All right, so we'll do that. Before, though, let's take a look. Let's go to the scalping section of traders.com. In 37 minutes and 7 seconds, we will have non-farm payrolls come out. If the actual headline number is less than 113,000, there's a scalp on Aussie dollar. There's no scalp on euro dollar. Look at that, guys. There's no scalp on euro dollar. There's no scalp on pound dollar. Really? There is a little bit. There's a scalp on Kiwi dollar, but no scalp on CAD. No scalp on Swissy. No scalp on USD yen. This is a dangerous setup. But let's see if we can get some congruency that on the ones that do have scalps. If it comes out less than Aussie dollar, 75% chance up. Okay. Same thing. Kiwi USD. If the actual is less than 113, there's a scalp and 75% chance up. So they all agree. And that's it, right? Aussie and Kiwi, that's it? Wow. Yeah, so this is what it looks like. But I can tell you right off the bat, I'm not kind of really loving that. So here's the trade plan, by the way, right? Okay. This is the trade plan. If it's less than 75% chance the 2-hour will be up. If actual is greater than 113, 87.5% chance the 2-hour will be down. So I click on the highlight historical events for the greater than expected. 87.5% chance down. Okay, cool. And you can see on October 4th, it was a drop and stop. July 5th, it was fizzle and fade. June 7th, it was down and run. April 5th, drop and stop. March 8th, it popped and then dropped. Interesting. February 2nd, it dropped and ran. Okay. Right? Dropped and popped back on December. Interesting. It's nice to have the data, though, isn't it? So it looks like if you're looking for a reliable, repeatable pattern inside the volatility of non-farm payrolls, okay, you would want to look for an actual greater than 113. Aussie dollar down, euro dollar down, pound dollar down, Kiwi dollar down, USD CAD up, USD Swiss franc up, USD yen up. In that case, if it's greater than 113, there's lots of scalping opportunities. If it's less than, okay, you would expect US dollar weakness, but the thing is, remember what we're doing here. We're asking, is there volatility? And if so, inside the volatility, are there reliable, repeatable patterns? And then we then break it down to say, well, we want to look at 4 different time frames. And we want to look at, a positive delta or a negative delta. So there's a lot of variables in all this analysis. And we go back, dozens of NFPs. And because we have all this data, we can tell you quantitatively, not some, guru on YouTube. This is quantitative analysis of this, of patterns inside of volatility. If it comes out less than expected, that may be good or not good. That doesn't matter. It just, we know there are really not any reliable, repeatable patterns for you. There'll be volatility, but you need to be very cautious. And if it comes out greater, oh my God, it's a whole different world. Dollar's going to get strong. Isn't that neat? And there's scalps on every dollar pair, where if it's less than, there's only scalps on 2, which means it's very unreliable. It'll do something, but you have a higher chance of losing money if it's not reliable. It's pretty cool. It's pretty cool, huh? Right now, the only thing in Forex that you should be trading is USD Mexican peso. It has the best implied volatility. The best implied volatility. Do you want to learn how to trade Forex using implied volatility? It's something that options traders have done for decades, right? But in this case, we can utilize this information for entries and stop loss placement. Yeah, Mark, I believe. Let me look. Okay, commodities. Right there. Gold and silver, bro. Okay. The thing is, we see it down here. It's only a medium opportunity, but maybe like you can see an hour from now, volatility is likely to return and increase. And this 4 hour is the bottom of the range. Okay. So a bull could buy there. Up here around I guess you can look at here. 2757. No, we want higher than that. 2772. 2772 is where bears are likely to sell. You like that, Mark? What do you stink? What do you stink? Smell like a plan? Yeah. Yeah, no, realize that what we've done is we've looked at Fridays at 7. Okay. And then we look at 8, and then we look at 9, and we look at 10, but we look at the range of these hours calculated on 15-minute rolls, so they're constantly floating, okay, and adjusting. But just think of it, in this time of day, if you look at gold going back, weeks and weeks and weeks and weeks and weeks, months and months and months and months, how much does gold move? And then you get a high and low range, right? And so if the market is bearish and bears are control, bears sell high. So how high? Well, quantitatively here. And they would take it down. Where would a bull buy if bulls existed? Now, it's not a bullish market, but nonetheless, somebody had an order here, which was already implied in the data. Okay. That's pretty neat, isn't it? And so this page updates itself in real time. So you can just sit here and watch this page and it'll just update. And all of a sudden, a lot of these medium opportunities are going to turn into better opportunities. Because like I said, we're looking at hourly, 4 hour, and daily ranges, but updated each one on 15-minute rolling candles. So the hourly is 4 15-minute candles. What's the range? And then 15 minutes from now, we drop a candle and add a candle and then recalculate. And we're doing that, for the 4 hour, we're doing that for the daily, and it's constantly adjusting. And I'm telling you, it's really, really, really good. And it's not just in general, it's every Monday this time of day, every Tuesday this time of day, every Wednesday, and you get shapes to the market, right? And like I was suggesting, entries for bears would be, sell up here and you want your stop up here. Why would you want your stop above the daily high? You're like, well, it's because, you got to have it above resistance. Yeah, that's true. But another way of looking at that is based on dozens and dozens and dozens and dozens of, data sets on what gold does, how gold behaves based on price action. Think of it this way. It's very unlikely you'll be stopped out based on what gold does, not based on a number or an indicator or some hocus pocus or what I always use 30 pip stops. Whatever. This is quantitative analysis of the candlestick data. This is what gold does. And so if you were to sell in this zone, okay, that's usually where you get your bears entering. And if you put your stop above the high, we just know based on dozens, 50, 60, 70, days of range, it's just very unlikely to go from here to here. Now, obviously it can, and past performance does not predict future results. But with that being said, we do have the data and suggests statistically you're quite safe up here with a stop. And so what you're trying to do as a technician now, because when you look at implied volatility, it has nothing to do with trend. You have to know if you're a bull or a bear. Yeah, implied volatility uses range analysis, but it's not directional. Okay, and nor is this the target. The target is the pattern. And so that's why, we have our scalping radars, right? Here's all the scalps. These are all active scalps. Let it load. These are all active scalps. So you can say, hey, only show me scalping opportunities with 75% or greater opportunities. There they are. Okay. Volatility radars, scalping radars, and the news radars. And I just love the news radars. It's so intense. The data is so deep analytically. It's mind-boggling how complicated this tool is. Yeah. And so you put them all together. Now, on the technical side, it's not really magic. Okay, it's not really magic. These are patterns. So there's pattern recognition. But the amazing part about this is that it's looking at 7,500 charts, and it's only giving you a couple of dozen opportunities for you to consider. But they're not predicting the future. They're just patterns. These patterns are emerging, so it's not after the fact. These are emerging. So you should go to your charts and do further analysis and be prepared for what might happen. So this is before it happens. So okay, in this pattern, or let me say it this way. Does this pattern offer or suggest strength or weakness in this asset? What does this USD Rand point to? Strength or weakness? Hurry up, answer. If you don't answer quickly, I'll start singing and you'll pay the penalty. Come on. And by the way, thank you for being here this morning. It's super cool. I love what we do. This is really cool. Oh, and out of respect for our host, FX Street, could you click the thumbs up button? I hope that's not too much to ask. They're very good hosts. Okay. Please share some love. It's no biggie, right? Click the thumbs up button. But going back to this pattern shows weakness. Okay. So this down arrow is not a trade signal. It just is showing you, based on the pattern, what the next leg is likely to be. So is that down arrow an opportunity or a threat? Opportunity or a threat? Okay, well, if this pattern exhibits weakness, only bears sell. Okay, only bears sell. There are no bulls. This is something that takes a while for retail Forex traders to figure out. There are no bulls. If you buy in a situation like this, you don't know what you're doing. I mean, it just comes down to that. You're an amateur providing, you're a liquidity event. That's all you are. You're adding liquidity, but you ain't making any money. So only bears are in this, and bears sell high. And so therefore, this is an opportunity. Okay. And so that's good. That's good. Now, we will likely see patterns where we're in a down channel like this, but the gray arrow is pointing up. Well, that would be a threat. Okay. You don't buy low, you sell high. So you have to understand pattern. Which reminds me, I have a free download for you. Oh yeah, it's in the email. So you guys have it. Have you downloaded this yet? Building trading muscle memory. What was that? I've never seen that before. All right. And what you do is they're flashcards. Okay, flashcards, so that you know how to trade these patterns. And many people believe they know how to trade these patterns, but many have been trained wrong. They've been trained incorrectly. And so this helps that process of memorizing. Okay, so like pound yen. Let me zoom in so you can see this better. Okay. Is this pattern exhibiting strength or weakness? Yeah, strength. So this next leg of the pattern, is it an opportunity or a threat? Okay. Think of it this way. If there are only bulls, is this an opportunity for bulls or is this a threat to bulls? Because some people, here's what they'll say is, well, it's a threat to bears. Dude, there are no bears. They don't exist. If they existed, it wouldn't be trending up. So it's bulls buying, bulls taking profit. Bulls buying, bulls taking profit. Bulls buying. Okay, so it is an opportunity. Okay. Those are fairly easy. We have fairly complicated patterns. Let's do this one. All right. Let's do this again. All right. Strength or weakness in this pattern? This one's tougher. Strength or weakness? I love it. Neutral, neither, pass. Love it. Come on, let's go. Strength or weakness? I'm going to start singing and you're going to pay the penalty. Come on. This is muscle memory. Strength, weakness. Dude, we are all over the map. Okay? There's only one answer, and I think you guys haven't studied. I feel like a high school algebra teacher, and you know, everyone's getting C minuses, huh? All right, here's what is likely to happen based on this pattern. Are you ready? It's a complicated pattern, but you just should know this. Okay, X to A to B, B to C, C to pink dot, down to C, and up and down and up and down. This is weakness. So you could, okay, some people see this as an opportunity for here to here. Yeah, that's a scalp. Okay. But the long term is more likely to be this. So you could argue it many different ways, right? And you could argue that is short-term strength with a threat to bulls. I don't look at it that way. Let me explain this to you, because a lot of gurus will go through, what's in the books, and the books will tell you, if you look at this angle and that angle and this angle, it's not really what's going on. Okay, it's not really what's going on. If you simply looked at the higher time frame, you probably see generally, like a daily chart, you probably see this in general, and that this is where a lower high on the higher time frame would form. So this is on the, this is the pattern, and this is on the smaller time frame. This is your 3-wave correction kind of thing, if you're an Elliott waver. Okay. To me, it's just a higher time frame issue. It's just simply a time frame issue. Down, 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 up, up, sell, down, 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 down. So all these different angles and stuff, I don't really care. But this is really a form of consolidation. Okay. Yeah, you don't have to like it, but you have to understand it. So you might be looking at a 1 hour chart or a 4 hour chart, but what you're missing is the daily chart. You're like, oh, that's easy. Yeah. You just have to understand it. You're like, okay, I got a leg up. I could scalp it up. But if there's like a pivot and, you know, whatever, you have to know it will make a higher high followed by a lower low, which is unusual. But look, notice this. This one here was a big drop. Let me delete this. Okay, we had a big drop followed by a higher high, followed by a higher low. So we had lower low followed by a higher high, followed by a higher low, followed by a higher high, which will then follow with a lower low. And you're like, oh my God, that's complicated. Or you could just say, you know, just change the time frame. And you're like, oh, well, that's easy. Yeah, I know. It's supposed to be easy. Cool, right? Cool. Yeah. Hey, really? Seriously? There's 90 people watching and 22 people have clicked the thumbs up thanking FX Street for hosting this conference. Really? 80% of people? Come on, guys. Your mother would have expected you to have some common courtesy. I mean, come on. It's not that big of a deal. Click the thumbs up button. Not for me. I might be an idiot. That's fine. Don't worry about me. Let's thank FX Street. Okay. Hang on. I got phone pinging. Okay. So, yeah. Neato. I'm using this, I'm using traders to burn through lots and lots of charts for me. And what I am looking for is yen pair strength. So Japanese yen weakness. You can see right away channeled down, and I want to be a bull, right? I want to be a bull. So let's take a look at this. Help me analyze this. Okay, I'm a bull on this pair. Does this show strength or weakness? Oh, I see. You're on FX Street? You're supposed to be on the you're supposed to be on the YouTube page. Shockwave, don't worry about the RSI. It's not telling you what to do. Interesting, guys. You were not supposed to be on the FX Street page. That's interesting. Should be here. It's still FX Street, but if you can't even click the thumbs up button. Yeah. All right. So let's go back to this. You said weak. Okay, good. I agree with you. This exhibits weakness. So the up arrow, is that an opportunity or a threat? She was more like beauty queen from a movie scene. I said, what you mean? I am the one who'll dance on the floor in a round. This is a threat. Let's go through the logic. Who sells falling wedges? Bulls or bears? How many bulls are in a falling wedge? How many bulls exist inside of a falling wedge? None. So it's not an opportunity for anybody that's trading this. Okay? So if you are a bear, and there should only be bears, this is a threat. If you want it to be an opportunity to buy, there are only two things you can buy. Okay? You can buy a double bottom. Oops, let's do it this way. A double bottom. Okay? So is this a double bottom? No. The other thing a bull can buy is a higher low. So is this green arrow, is that a higher low? No. So you are not a bull if you buy that. You're a bat. And a bat stands for broke ass trader. That is not an opportunity. That's a threat for bears. Bears should probably start jamming stops or whatever, but they should. This is a recognition that we have broken through the primary resistance line, and it's likely to go up and test, 110. Uh-oh. So you should be defensive here. Now, if you are a bull, then what you want is down. And then you're like, is this a higher low? Yeah. You can do that for sure. Okay, for sure. But you can't do it until it's a higher low. Or, of course, some sort of double bottom. But by then, this pattern would have failed and we would have moved on to a new pattern. Who will dance on the floor in a round? This is cool, right? Oh, is it new? Are we almost there? Oh my God, you guys didn't even bring it up. News is coming out. Cool. If you guys want to use my Squawk service, I'm going to run it on YouTube for free. Why should you pay hundreds of dollars a month when it could be free? So over here we have a real-time calendar. It's not as good as FXStreet. Maybe I'll license the FXStreet one. We'll see. Haven't talked to them about that. Here's real-time news. The last one came out 3 minutes ago from FXStreet. Thank you, FXStreet. And over here is real-time pattern recognition. So this is the Mexican peso. We looked at it about 14 minutes ago, and you can see we got the red candle. Okay, 1 minute to NFP. Do you remember? Greater than 113 was much more reliable than less than 113 as far as volatility. "30 seconds.
Spain flood death toll hits 215 as Valencia opens temporary morgue.
4, 3, 2, 1. We're looking for a bigger number if we want reliability. If you have the number, go ahead and post it. I don't see it yet. It's coming in. 12? Is it 12? 12? 12? Oh, 12. Oh my God. Oh, the Fed is going to go ape crazy. Oh, the market is going to be nutso. So the Fed is going to what? Have to cut interest rates?
United States labor force participation rate dipped from previous 62.7% to 62.6% in October. United States average weekly hours above forecasts 34.2 in October. Actual 34.3.
So yeah, this runs 24 hours a day, gathering and reading the news to you. And nice, right? So it's just reviewing NFP stuff. Wowzer. So the interesting thing is, it might be so low that the market's going to worry that we are going into recession, that we've already gone into recession, that that a low number is good, but that's too low. So, yay, the Fed's going to cut.
United States average hourly earnings year over year meets forecasts 4% in October.
United States non-farm payrolls below forecasts, 113K. In October, actual 12K.
Bay Street likely to open on firm note.
So, I don't know if you noticed or maybe you haven't, but the UK dealing desk shut down, and now it's me and my lady colleague. We read the news throughout the New York session. Yeah, I read the news for about 10 hours straight to keep you informed. I gather it and I report it to you. And I say I loosely. But anyway, so we're gathering at traders.com, we're gathering all the news about NFP, right? So average hourly earnings meets a forecast of 4%.
U.S. October non-farm payrolls, plus 12K versus plus 113K expected.
Cool, right? It's neat. So we're at this point where it might have just been too low. This could go from good news to bad news, but all I can tell quantitatively is that there's not a reliable scalp in this situation. It was much clearer, much cleaner if it was a big number. So, wow. One way that I like to filter this, of course, is you can go to the smaller time frame indices. So I create indices. Okay, so let's see, hour. Okay, so we can zoom in on the dollar, and initial dollar weakness makes sense. The Fed can cut, but I wonder if
Crude
it's going
oil soars on raised Middle East tensions. OPEC plus output decision eyed.
And so I wonder if it can last, though. Like, that's a really bad number. We'll have to look at the Fed funds futures, huh? Yeah. Let's see if the fundamentals page will load now, if Google Cloud is recovered. Yeah, it looks like it has. Okay, good. See? See, it wasn't us. So Bitcoin down almost 3%, dollar flat still at 104. S&P 500 bloodbath yesterday, so we'll see if there's a continuation of that. You can see Nikkei, and we'll take a look at that in a second, but Nikkei, I think, is going to drag all this stuff down. 10-year T-note yields are still quite high. Oil, hey, we were at 67, and we gamed that whole thing out where I showed you support going back years, and suddenly, we're at 71, 72. All that makes sense, and there's still bid on gold, probably from the central banks. Sky Killer brings up a good point. The hurricanes got in the way of NFP, so I think there'll be revisions, and then next month will be much bigger. But yeah, good point, Sky Killer. That is for sure. They got in the way of the data gathering. Just generally, risk off, and most of this risk off showed up yesterday. But when we look week over week, or even how about month over the month, since the last non-farm payrolls when we met, volatility measured by the VIX is up 13.3%. That's bad. But yet the S&P 500 did nothing for one entire month. Now, sure, it went up and down, up and down, up and down, but the change was flat. Okay. Yen is 6% weaker, so that's good. Dollar is almost 3% stronger. That's bad. 2-year treasuries are way up. Bad. 10-year treasuries are way up. That's bad. And by up, I mean yields. Gold is up 3.5%. I score that as bad. And the put-call ratio favors puts, favors bears. And that's bad. So we have a quite bad score month over month since we met last time. And even worse, week over week. So it's definitely risk off right now. We know that for a fact because we're looking at, 24 different variables. And they're not just variables, they're different constituencies that are making investments with the same information that you and I have. But like yields traders don't talk to VIX traders or yen traders or options, right? They're all different groups of people with the same information, and we're measuring what their strategies are and trying to see if there's congruency. And if there is, then it's the intrinsic underlying trend. You can't see it directly, so we have to look at 24 different markets to see if there's one underlying theme. And there is. It's risk off. So we look, I don't know if you can see this, but it says in these scenarios, buy dollar, buy yen, buy Swissy. Yeah. Let's take a look at the scatter plot. And so this is what I want to show you. Nikkei is way down today and might bring some yen strength. Instead of, we want weakness, but that might bring strength. We'll see how the yens respond to an amazing NFP. We also have S&P 500 and Russell and Dow all dragged down as well. And just to show you, like, we can just focus on indices, right? And these are up. Are they going to get dragged down? Well, see, I didn't want to really cover all this before because of the situation we're in. This might change everything for now. Well, Sky Killer, it's, You have to talk to him. Why are you leaving? By the way, later today, the Commitment of Traders report is going to be open or updated. So this is from October 25th. Just make sure you spend some time this afternoon or over the weekend looking at the change in capital stock, but also the change in cash flow. Okay. So like I like to look at the net change. So last week, there's a big move into dollar, big move into the Nikkei. And money came out of yen. So that's why you might have seen like, the yen's rally. Okay. And so this updates right at the market close around 4 p.m. So make sure you go over your COT data from we pull this out of the Commodity Futures Trading Commission, the CFTC. So if you want to know where to get this data for free, I can show you. I used to do it week after week after week after week after week for years. Yeah. So if you want to know where to get it for free, I'll point you in that direction. Okay. But what I was showing you is Nikkei is pointing down. Nikkei is pointing down. But not, like we already have these opportunities lined up. So this is where bears would sell. There's no doubt about it. I mean, absolutely. If you're a bear, this is basic price action. As basic as you can get. Okay. As basic as you can get. So bulls have to like be cognizant of that and then wait to see it fail. And if it fails, it's very important. Okay. Be interesting, huh? Remember, bulls buy double bottoms and higher lows, right? Don't forget the higher time frames too. Okay. You can see all we're doing and right is that we're caught between the 5 EMA and the 21. So bears sell here, obviously. Bulls buy down here, obviously. And we're right in the middle. So it's like, really? What's the safe entry? Yeah. The projections I already have in TradeR's Sky Killer. So like what projection are you looking for? I already have it in our database. Okay. Well, things like inflation, yeah. Do I plot GDP and all that? No. Okay. But anyways, guys, let's go through the basics. How do you trade a rising wedge, an ascending wedge? How do you trade this pattern? Talk to me, Goose. Teach me. Okay. Breakout, pull back. Okay. You retest the old resistance line, but resistance is now support. And so a bull does this. Yeah. Yep. So it appears that bulls bought on the daily 21 on the weekly M2. Is M2 a buying pivot or a selling pivot? Yeah. I mean, the way I look at it and the way I teach pivot points is there's only two places to buy using weekly pivots. Okay? There's this zone and there's this zone. That's it. So you can buy here or you could buy here. That's it. There's no other place to look. If you're not at those price levels, then whatever you're looking at is a mirage, if you're a bull. If you're a bear, okay, and I'm not making this up. It's in my book from 18 years ago. It's in my training courses from 15 years ago, okay? The sell zone is here. So the idea is if you're a bear, you have this or you have this. Which one's right? I don't know. I don't know the future. But I can do some fundamental analysis and make a decision. Do I want to buy dips or do I want to sell rips? So somebody sold it here. The way I describe this is bulls sold here. A bear would sell here. Okay, this is a bear sell. This is a bull sell. And that's why I look at this as this is likely bulls. Okay, bulls sold here and they bought it back here. Basic pivot point theory. Okay. Yeah. Is that right, Denise? Yeah, there you go. That's where you'd take profit. Okay, nice. Kiwi having a struggle. You remember we looked, Aussie was quite weak. And so what I'm looking at right now is really on the daily, is it going to hold at support here? And we're almost there. If it goes up, it might present a buying opportunity on a small time frame. And if it collapses below that, it's definitely walk away. Say something, I'm giving up on you. Okay. So I'm looking for a reversal. Okay. Is this a reversal up? No. 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 Is this a reversal? Yeah, maybe. Yeah, maybe. So I buy here. And I get long. For what? 50 pips? 100 pips? No. I could be in it for a year. I might be long, buy it here and be long for 1,000 pips. That to 110, there's 1,000 pips. The high is 1,000 pips. Okay, and now check this out. So what am I actually trading? Double bottom. higher high, higher low. Is that a good opportunity? Yeah, totally. Yep. 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 Because a bull can only do what? Buy a double bottom or buy a higher low. In this case, it's a role reversal, right? So if I bought here, would I go for 50 pips? I'm like, if you only pulled 50 pips out of that, you're a jerk to take all that risk. Okay. Yeah. Like Flavor Flav said, you're like a jerk. You're out of work. Yeah. You got to work. Zip over to the beast. Okay. Same. There's your beast. Let's use USD yen. Here was a potential for a pullback and we never got it. Now we're at a situation, once again, this is a threat to bulls, but not an opportunity for bears. The threat is this. Is that plausible? Only at this price. If we're at the next one, no, I wouldn't be worried at all. But because of this price, I'm worried. So where do bulls buy? Well, a bull could buy in this zone between the 21.55 and central and down here 47.50. So basically retest 150 or the next one way down 47.50. So this is what bulls are thinking. Okay? So I know what the bulls are going to do. Of course, if it double bottomed down here, a bull would try this. So those are the three plans that a bull would have. I don't think there is another plan. You're like, oh, well, my cousin trades RSI with MACD. Whatever, bro. Good luck with that. So there's that. But the bears are definitely, that is plausible. Now, would it happen that fast? No, it would manifest differently. It would manifest like down to up to dun to dun to dun to dun to dun to dun. Okay. So that's what we're facing on this one. And it doesn't surprise me because now the US dollar and the yen are competing. And I think that isn't typically something that I trade. Sometimes it's a great trade if the dollar is strong for direct global macro fundamental reasons, not necessarily just what's going on at the Fed. And so you got this newer level of, inconclusiveness. So yesterday I conducted a short performance coaching that we call swing trading. And we do that. All members of traders.com have access to that. And last night I had set this up for a high probability of this. Okay. And coming down to here. And that's not even something I want, but I'm like, that's what the chart says. Okay. What is the obvious clue that a change in direction is much more likely than before? What's the major clue on this chart? What's the thing I could look at and go, oh yeah, right there. It's going to reverse. I'll give you a hint on hell last night. in the swing trading group pointed it out perfectly. Monthly profit zone, yeah, that's not it. Okay, it would more likely to occur up there for sure, but it's not the signal, because very often it just keeps going out of out of position. But there's one thing on this chart where I see it immediately and I'm like, oh yeah, it's probably gonna roll over. Okay. No higher. You're not getting you're not getting, everything you're saying is correct, but you're not getting the most correct answer. There's one thing. There you go. Irrefutable. Okay. We went from a higher high all the way back to the neckline. And that's the thing. That's the thing. And as soon as I see that, I look left at the shoulder and I say somewhere over here, it's going to fail. Then I look at the distance from here to here and measure it, which I did. And all I did is I used this line. Then I took the neckline forward and suggested that the next move would look like this. And here to here is the same distance from here to here. In fact, it's quite literally the measurement. I actually just drew this vertical line, okay, from there to there, and then put it here to here. Okay. Oh my God, isn't it beautiful? So yeah, that's the thing. This drop does not exist in an uptrend. Cool, right? So that was yesterday when we were down here, because notice that would have been about 12 hours ago, actually a little more than that, 15 hours ago. So we were down here at the time, and I drew this, and then that was our plan. I swallowed my pride. All right, there you go. Cool, huh? You guys having fun? I might be running out of steam though. I've been traveling and now I feel, well, I was up at 3:30 in the morning too, so I guess that, so I've only slept 8 hours in 4 days or 3 days. Kind of running out of steam. And usually what happens is then I get sick, right? And then I lose a week, and I can't get sick because I'm speaking at the Fed, and we got, we have the election and everything. Pretty big week though. So Aussie and Kiwi are weak, and Euro and dollar have been strong. So probably one of my favorite go-tos in this situation would be this euro buck. So I've already done the trap and break for you guys, I don't know, a week and a half ago. So what is this? Well, I have these lines, like if you're at this price as a bear, this is very bearish. You should know a double top is bearish. Okay. This line is you could take profit. This one you should take profit. And this one you must take profit. Isn't that cool? Right here. So it came down, it monkeyed around for days and days and days. So what you do is you trap it. Okay, you trap it, the highs and the lows. And the idea is the next trade is up, down, gone. And that's exactly what happened. Okay, so buying it now is like, I don't know, 3-4 days late. Like you didn't have that planned out, then maybe you don't deserve it. The next thing is the probabilities are higher for a sell from the previous move. And so I look at this like bears are probably going to sit here. So there's going to be a battle here. Okay. And there's going to be a battle here. This line exists because of this support. This line exists because the distance between the 2155. And so we're in this zone now where the next day or two, we could be up to here, but don't miss the fact that this is very plausible. And we can simplify all of this and we can go to, I guess we can go rainbow. Or we could go, maybe let's do Lucas. Where are they though? Yeah, my mind is slow, I can tell. There we go. So if you want to zoom in, like if we were going to keep it simple, there's only one trade plan available in the next 48 hours. This. Okay? If you were a bull, you didn't have the monthly, okay, support. You didn't have that. You didn't do the trap and break. You didn't do the price action. You didn't do any of it. Now, it's a counter trend trade, but there's only one counter trend trade I teach, and that's it. So it's like, you just didn't do it, bro. So buying now up here is very unprofessional. So it's like, this is a sell zone now. And maybe it'll happen later today. Maybe it'll happen on Monday. I don't know. I don't know. I don't know. Maybe something fundamentally has changed and all that kind of stuff. I think what you're going to find is people are going to discount the 12K and say, that's the hurricanes messing up the numbers, and this one doesn't matter, and we just go on to the election, and that's that. Like, it's fascinating, but it's going to be revised or replaced where the next NFP will be a much different number than 12. So people are probably like, whatever. And now we lock up our money and get ready for the election on Tuesday. Oh! Okay. So make sure you do your COT. Okay, now we've clearly analyzed Pig Dog. Does anyone want to buy Pig Dog in the next 7 days? The UK announced a new budget. I mean, you could be a bear here, or you could wait to be a bull. Just like using our patterns, this is definitely a sign of weakness. But you could wait for strength. That's the thing, right? So eventually, like on traders, you'll see you'll get an arrow this way and it'll say, uh-oh, it broke to the upside. Cool. Then you buy a dip, right? That's what you want to look for and connect this. So you can kind of wait. And where would that, I think it was you, Jim, in the other pattern, you mentioned, well, this is where you would see a head and shoulders form. You're 100% agree. In reverse, where would an inverse head and shoulders occur? Well, this is the equal but opposite, right? So what do we do here? Okay, and then here's the neckline. So if we get 100% pullback where we go from here all the way up to this level, then that goes, uh-oh, and we put that there, and then we come down here, and then we go. But that's what I just did, but I did it without thinking. So I should explain it, which made me think, and that's how you do it. I mean, I've just seen it 100 million times, right? And yes, this is important, correct. I don't think it's because of that, but if you get the 0 to 100 pullback in this zone, oh yeah, it's important. Okay. So you might want to watch for some of those, remember you have machines now doing your technical analysis, and in your mind, you could be ready and say, well, you want yens to go up. Well, this is a threat. Okay. USD Mexican peso is rising, but rising up to a sell zone at the psychological level of 20. All right, that might be an opportunity for you. Up is an opportunity for you. As a bear, you sell high. JP, it can, yeah, especially if you've already accomplished the current month's pattern. Yeah. But I think I think when they matter in a normal way, it's when you don't hit the current month pivots, but next month we rise up and hit the pivots that we missed. I think even Rob Booker teaches like a missed pivot strategy, and I think that's probably it. What I call it is last month's target zone is probably the new month's R or S, so I call them inside months. But I think he called it missed pivots, so maybe we'll talk to him someday. So peso, I lined this up 100 years ago for everybody. Like, I can't be more clear than that, right? What do bears sell? Okay, double tops. Or even better, triple top. Okay, it's resistance, right? Yeah, cool. So maybe it wouldn't be that steep, of course. I suppose the other thing you could do, okay, this is dangerous though because it doesn't fit my fundamental bias. I can only sell this. And someone else might say, well, this is a rising wedge and we're going to get caught until we get to the apex, which means, yeah, maybe it comes down a little bit, but it won't come down that much. It'll come down and it'll go up and it'll come down. And then this pattern would break to the upside. Yeah, but I don't want that. I want the yield. I want the US dollar to get weak because I want the economy to do well in 2025. So I'm talking about selling it and holding it for the year or more. And that's not a bad price to start doing it. Oh my God, it's so good, isn't it? Isn't that good? Yeah. I got that fluffy travel hair. Yeah, life on the Gulf Stream. So when we go now to peso, it's only a 15-minute chart, okay? But it made a lower low, so a lower high might be the opportunity, you see? So I start strategically, and now I really have to zoom in because Tradars looks at the tip of the spear. And in that case, well, it looks at all the charts. This is a very, very, very tip of the spear, right? But all it sees is, right, lower low, lower high. So you can kind of measure it out kind of like this way, right? So it made a lower low, so you sell the lower high. You can see it rising, so the idea is the next move would be something like this. Okay. Now the red zone is a zone for selling anyways. We've known that all year. This whole red zone is the projected high for the year for USD Mexican peso. So it's not the dumbest idea in the world. And we just came all the way back from here to here, right? Which sets up a lower high, lower low, which sets up a lower high, lower low. So that could be the general theme going on. And meanwhile, you can see, well, let me do it with an arrow because I can't do that straight. You can see the general theme that's going on here. And I'm plotting that out too. Okay. And we're looking at the slope of the mean. And so go for today, well, actually this week, if you look at what has occurred throughout this week, and we are now, right, that it's more bearish than bullish, and that's the opportunity we're looking for. And you could get short, let's say this retest to 20. So that's what's going on right now, retest to 20. And I wouldn't be shocked if we were short 2 or 3 years. Oh, well, what? 2 or 3 years. Now, the big thing is if Trump wins on Tuesday night, we won't really know to Wednesday, but let's talk about Wednesday. If Trump wins, then this trade might get a little complicated because some people are going to say, oh my God, well then Trump's going to build a second wall and make the Mexicans pay for it or something, right? I think there's more fear than that. That's more fear than logic. I think if Trump goes to war, or a price war, a currency war with China and tariffs on 30, 40, 50, 60%, then where's all that business going to go for assembly and manufacturing and delivery to the United States economy? It's going to go to Mexico. So, yeah, he might tariff Mexico, but if he tariffs China even more dramatically, then Mexico's, right, is the place you ought to be. So they packed it all up and moved to Puebla, Mexico. Sorry, I tried to put in the Beverly Hillbillies on that, but it didn't work. Crash and burn. Okay. Yeah. I'd love to buy some industrial land in Mexico, and then over time have somebody build a factory on it and just sit. Give that to my grandchildren. Like, Grandpa Wayne bought I don't know, a cement factory. No, I guess that wouldn't be it. An assembly factory, an hour from the border in Mexico. It was farmland when he bought it, but now it's 1 million square feet of something. That'd be cool. I think Mexico could do very well. Finally, you get a payoff from being next door to the world's largest economy. Mexico has a lot of oil. Maybe they'll let us get in there. Drill, baby, drill. Mexico has a lot of gold, but it's very expensive to extract because of the geology of where it is in Mexico. But at $3,000 an ounce, maybe it's a giant maybe. Maybe you can do it now, huh? So there's one on the exotic side. Could be a little love going on over here on the Rand. Let me drop into a smaller time frame. And I've been eyeballing this area, and maybe we're getting close. Still a little early, looks like. But you can see the logic of what I'm trying to get to. The logic is solid. Then the next part is like, where do you ambush? And you start guessing on prices. I said, maybe here, maybe here. It definitely went higher, but we're back down to the zone, man. Like, this could be game on. It almost smells like a 2155 cross down on this 4 hour. And that's a long-term short. Look at 2155 kiss. We could be short Rand, like if you're a trend trader, maybe you short it here and then stay with it on the daily. A trend trader, for example, their last sell signal was in May. Let me say that again. The last sell signal for USD Rand was May. You would still be short November 1st. And it looks like one next wave down. What do you think about that, ladies and germs? 1 or 2 trades a year. We call that a trend. Right? Is anybody interested in catching stuff like that? You're going to need to know fundamentals of macroeconomics for that, right? Now, why would you want to short USD Rand? Yeah. You collect massive interest payments. For those in my Council of Investment Advisors, we're supposed to meet on Monday. And I'd like to move some money around. Plus, we have some money to allocate. Yeah. So that's all part of the portfolio construction, right? And management. So a little rotation, a little allocation. Yeah, I'd like some more people to be involved. So I think I'm going to make a few tweaks if the current council doesn't mind. So maybe we'll talk about that at the meeting, and right, because it's there. Yeah. But I'd like to have more. Like, I don't want more than, I don't know, like I originally said, 24 people maybe, so that we can do an annual meeting every so often. And if 10 out of 25 showed up, then it's a good little meeting. We can, still good little meeting. But I don't want it to be a lot of people because it's too hard. Yeah, I had a little meeting yesterday morning. Was it yesterday morning? Anyways, and the plan is to put together $25 million to start take my charitable fund and turn it into either an investable fund like a hedge fund, or really into an ETF that you can just go on to E-Trade or Charles Schwab or TD Ameritrade, and you just like put money into Wayne's fund. Done. Just like that. Like, really. So anyways, I'm working on that for you guys, because I feel like I'm doing that for others. So even with 25 million, you might think that's a lot of money or something. I don't know. I wouldn't even make enough money to earn a salary. I'd just be doing it for free. But I did talk to people, and they're like, yeah, we can do that. Yeah. I just have to do it for free. I'm like, okay. Now, maybe if it gets to 100 million, which is still pretty small for an ETF, but if it got to 100 million, I could pay myself a small salary. But almost all of that would go to compliance. But I could take a small salary, but it'd be, it'd have to get to 1 billion before I earned any like serious money. So you might as well just do it out of mission, huh? Excuse me. You just do it out of mission. You make the world a better place. Yeah, maybe down the line I can, I don't know, earn something. I was just thinking though too, if I could add leverage to it, because its greatest weakness, if you will, is that it's too conservative. It's like incredibly conservative, extraordinarily conservative. So what if it was less extraordinarily conservative and just very conservative, because I add leverage? Well, then I could produce, 20 to 25% a year, no matter what happens, up or down, doesn't matter to me. I still get my 20%. And that's kind of interesting. With a little bit of leverage, in particular if you know when to add it and when not to add it. Oh, we call that seasonality. You're like, Wayne, what's seasonality? Oh my God. Oh my God. What is seasonality? Let me show you seasonality. Yeah. Yeah. So you guys want to do gold, right? I think this one actually is called gold, isn't it? Or is it XAU? Yeah, gold. Okay. So we have a 30-year average in green of what gold does in January, February, March, April, May, June, July, blah, blah. And then a 5-year average, and then the gray line is what's actually happened this year. Yeah. So we typically bottom out in June and recover July, August, and then it drops in September. So, they're just off. It's like everything's shifted off this year a little bit. But from September to October to November, yes, they're negative months, but they're less and less negative, right? So anyways, we had this little drop in October, not unusual at all. But December, right? November, December tend to be, and up into January, tend to be good months. So you might interpret this like that. Okay. Now, that doesn't show you accumulation, so you want to just scroll down a little bit. And yeah, so we're in this period where gold tends to drop and then end the year strong. And I think we're just beginning this, right? We bottom out week 48, week 49, and then we have a good strong month. So the second half of November tends to go up. Also, week 48, it tends to be 2 standard deviations below the mean. Week 45, 2 standard deviations below the mean. Week 40, 2 standard deviations. So you buy low, it rallies up. Then you buy low, and it rallies up. Then you buy low, and it rallies up. Oh, nice. I know, right? So we want to know week 48. Okay. Yeah. So we have a few weeks yet. So gold could capitulate and then we buy it back. Do you guys like that kind of information? That gold could fall for, I don't know, let's say 3 more weeks and then we buy it. Now, of course, the election is unusual. U.S. stock market is open. Okay. And this is our role reversal. I have it all marked out. Last chance for bulls. Last chance, but we know it could fall for 3 more weeks. Good to know, right? And probably 3 weeks from now, we'll be at the moving averages. So we don't know if that's going to be what happens, but we can plan for it. It doesn't hurt to be prepared, does it? No. I swallowed my pride. Here's silver. We had 2 plans for it quite a while ago, in fact. Yeah, and so we had it popping up, which it did. Now it's come back, and we're at a 50% retracement on a roll reversal. Yes, we have a down channel, but in an up channel. So you have to pick your poison. Are you a bull or a bear? It'd be cool as a bull to have it come up, down. Like we want to break. I guess I'll do it with the drawing tool. Okay, we want to break this. So if you're going to be a bull on silver, what you're waiting for is up, 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 right? Little correction. Up, 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 up. Up, 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 up. Up, 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 up. And you're really just getting back into the old narrative, right? You see? So it's coming down. That's a threat to bulls, but bulls end up buying low. So you could start to prepare maybe to buy here or another one here or here, depending on like when it starts to develop support. Let's take a look at the stock market. Or do you want my WTI? I guess we'll do a little WTI. So this support that we're sitting on goes back a long way, right here, for example. And we drop into a smaller time frame now, maybe even smaller than that. And so you have to decide if you're a bull or a bear. I drew this little triangle in here, or rectangle, and I highlighted the pivot point, and it's been up ever since. It's 67.5. Now, a simple trap and break, you see? It's not magic, ladies and germs. It broke out, pull back, long and gone. That's a simple breakout strategy, simple roll reversal. Okay. Up, 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 down, down, buy. Put your stop below here. Long and gone. Nothing complicated about that. You just had to be a bull. That's all. Let's go to the stock markets. S&P has fallen to our pivot points, double bottomed on S2, and is no longer falling. What an amazing coincidence. Okay, but this area here is still a lot of resistance. Okay, this zone, oh, it won't let me grab. Okay, this zone in here. So watch yourself. 57.75. NASI simply has fallen to the deviations. So it's not crazy bearish, but it's been down. And Dow, no diggity, no Dow, is dropped to the neckline, which sets us up for a potential head and shoulders here. So that's the most bearish. Yeah, so we did a lot today, technically and fundamentally. We went through a lot of charts too. We did some pattern recognition. We looked at some of the fundamentals. Don't forget about the Commitment of Traders report being released later today. I hope you enjoyed the news squawk. I'm going to be releasing that pretty soon. Maybe even next week, so that you have a resource for that. Very cool. We have the election on Tuesday. Then I travel to St. Louis for the Fed meeting. There's some pretty good speakers at the conference too. Very neat. Would anybody else like to stand in front of 400 university professors that have PhDs and 20 and 30 years of experience teaching economics? Would anyone like to stand up in front of them and show them ways to improve? Would anybody like to do that? Or should I do it? Wow, huh? 400 university professors, PhDs, all tenured up at big institutions. Gee whiz, huh? Talk about walking into the lion's den. Bet it'll be a memorable day. I'll leave you with Bitcoin. I think you can see what I think. So far, so good. So thank you to FX Street for being a wonderful host for 223 months in a row. I hope you guys want to do this next month. Maybe even the month after. If you want more technicals or if you want more fundamentals, you just let me know. Ask questions, get involved. That'd be great. If you could click through to YouTube and leave a like, that I'd appreciate that. That helps promote the FX Street YouTube channel. And for everybody else, hey, if you want to swing by traders.com, we got a lot of cool stuff. Automation of fundamentals and technicals, but 5-6 hours a day of performance coaching. And I got some really cool stuff that I'm working on that I can't tell you about, but could be game changer stuff. So if you like what you see and you know you need it, swing by traders.com. We do good work. And we do work. Yeah, we actually work. So, peace on earth. May the pips be with you. May your profits be above average. And I will see you maybe at Off the Charts with Wayne McDonell next Friday. Have a wonderful trading day. Thank you to our moderator. I'll see you soon. Cheers.